So how much of a threat is it to world markets? Is Saudi Arabia really now at risk of over-tightening the oil market and therefore damaging the global economy and really hurting consumers across the board?
Good morning. Yes, as we write in our reports this month, and it's something that we warned for quite some time, is the market is really tightening in the second half of the year. Already in August, we saw global oil inventories falling by a massive 75 million barrels according to preliminary data. And with the extensions of the cuts by Saudi Arabia, but also Russia through the end of the year, we're seeing global oil demand overtaking supply by about 1.4 million barrels a day in the fourth quarter. So this risk, tightening the market, increasing volatility. We saw price volatility at a decade low in August when prices were steady around $85. But the latest cuts, we saw prices shooting past $90. And now, as you see, around $92 for Brent. So this is something that we are concerned about given the very fragile economic situation that we're in.
So, Toril, how much risk do these current prices of oil actually mean for the economy and inflation worldwide?
Well, we're looking at, so prices are still lower than they were last year when just in the aftermath of Russia's invasion to Ukraine. But still, with interest rates very high and central banks looking at how to ease those, higher oil prices, energy prices in general is obviously a key factor into those considerations. So prolonged high prices risk delaying the easing of monetary policies, which could put the recovery, the economic situation at risk.